Well, hello everybody. Michael Silva here. We got ourselves some rare stuff that's taking place in the market. We're going to discuss on today's stock market brief show. Hope you're having a wonderful start to the week. If you take a look at the 11 sectors that make up the S&P 500, we have, no surprise, technology leading the way up 1.28%. And towards the bottom of the list, we got utilities, real estate, and healthcare. Overall, the market today, we had the VIX, so volatility was up. And then everything remained relatively flat other than the NASDAQ was up 0.93%. We're going to get into what the market did on an intraday level, and then we'll go into what's been taking place. It's pretty rare occurrences that I pointed out there on the thumbnail in those prior two charts. And because sometimes rare things, when they happen, they can create opportunities or potential for opportunities that we got to just be patient for and watch. Now, if I'm looking at the SPY on the 15-minute time frame, we got above the daily expected move today for a very short period of time. We discussed the possibility for this to be a flag pattern, and when we broke above it and we stayed above that week-to-date anchored VWAP, which is also the daily VWAP because it's the day one of the trading week, we held, we back tested, and we played it through to that target level. So overall, pretty decent. Let's update the daily expected moves to see where we are. Okay, so going into tomorrow, we're looking at 453.09. So if this wants to continue to the upside, that could be a potential target for us. And then to the downside, 448.59. So if this breaks down from the week-to-date anchored VWAP, this is what I'd say be cautious for, right? Sometimes you get chop around it, but if we do break down and you see, a low or a lower high, a lower low, and then we start breaking down from that, it can open the potential door to 448.59. And as time progresses forward, this might be coming up, right? So the 5-day moving average, this right here, it is still inclining. So the bulls are still in control, albeit that things are getting a little frothy, which I'll demonstrate momentarily. One thing that you can point out is the RSI has a negative divergence where we have a high in the price and a higher high in the price, and the RSI is giving us a high in the reading and a lower high there, letting us know that momentum could be potentially slowing. So I would be looking at 448.59 potentially tomorrow if price starts breaking down. If price wants to continue to the upside, we want to hold above that week-to-date anchored VWAP. Okay, and then you want to play potentially up to the daily expected moves. But remember, the market can get it wrong sometimes, which means we can go into 2 standard deviation moves, right? 68% of the time, it finishes within the daily expected move. 68% of the time, it finishes within the weekly expected move. Last week, actually the last 4 out of 5 weeks, we've been finishing outside of the expected moves for the weekly basis. So to say that it might finish within there this week, I think is more applicable, but we need to be aware that obviously bigger things can happen. So the key levels to watch is obviously if price gets below the week to date, start paying attention to the 5-day and the lower daily. If price starts breaking above, start looking at the 453.09, the upper daily, to potentially the upper weekly expected move there. If we take a look at the Qs did finish outside of that daily expected move. This price action was kind of very similar, flagging at like the S&P 500. And you can see we gapped up today, which is rather bullish. And we talked about the anchored VWAP from this prior swing high. And we said if price can get above that, that'd be more bullish and it could open the door to potentially the upper daily expected move. Well, we got above it. We kind of doodled around and we came up, we back tested, and we closed right outside. So that all played out fairly well. So we're going to remove this on the next chart and we'll update the daily expected moves. You can see 385.34, which is right by the upper weekly expected move, and then below us is 379.88. Okay, as you can see, we started the week to date anchored VWAP right over here. Price action held, it's inclining, so that's rather bullish. So pullbacks to it can create potential opportunities to play even further to the upside. If price starts breaking down beneath it, start looking for potential back tests and then breakdowns where you see a series of lower highs and lower lows to come down to test that lower daily expected move. And even if price were to come down there or get outside of it, there is a potential gap fill from today, right? So if it gets outside of it, it might still, as the 5-day moving average is inclining, right, still might find a bounce back into that range where 68% of the time it closes within those ranges. Now, if we start breaking above the prior swing high over here, right, after already a pretty strong move, the upper daily, upper weekly would be the main targets. Now, things are getting obviously frothy as previously discussed. The BP-SPX chart, the RSI is now at 85.54, so pretty strong reading. Now, when it crosses up through 70 and back down through 70, that's when things could potentially get a little bit more bearish, as we've seen here, as we've seen right through here, and as we've seen right through here. So you have a drop, Then you have that drop right through there. So still rather bullish, but things are overextended, and these do move from overbought to oversold conditions, as we pointed out plenty of times. The BPCOMPQ chart is also showing us a negative divergence. So yes, the market keeps pressing higher and higher. There can't be a down day, can't be a down week apparently, but it will come. So you just need to be prepared, and this is where you kind of just hone in on your risk. You can, one, take profits, or if you're longer term, you can potentially look to add into positions on pullbacks versus adding onto positions after strong run-ups, thinking that you're going to FOMO into them, right? So it's always better, and if we're in a full-time bull market, you buy the pullbacks or you buy the strength after the pullback. If you take a look at BPINFO, this is the technology sector. This thing is getting very frothy at a 90.77 reading, where the RSI is moving just about back into overbought condition with that negative divergence there. And this is where I want to kind of point out some of the rarities that we're seeing. So the BPCOMPQ chart, right, we talked about right here, is getting that negative divergence on the bullish percent chart, but you can see also that it is getting pretty frothy from the 200 EMA. You could see here we're getting about a 15.39% reading over that. So you have the zero line right here, which means price action would be trading at the 200 EMA. And then when we start getting very frothy, you can see if you just look back to the left of the chart, we haven't really been back to these levels since this chunk of time over here. So it does happen, but remember, during this time is also when the Fed nuked us with liquidity, okay? And that is actually the opposite of what's taking place. Technically, right now, we're in a tightening cycle, but yet we're still reaching to extreme levels. The time prior to that was right over here into 2020, where the market was grinding up higher, and that was leading into that COVID crash right there. And then the time prior to that was in 2018. So it's fairly rare when this happens. And you can see we had this kind of strong movement to the outside, and then we kind of faded back, to normalize those levels. So to see something come back to around the 10% extended from the 200 EMA would mean that we'd be potentially up for about a 5% plus correction, which would just be healthy overall, right? It can't just go one direction. You typically get healthy pullbacks, and 5% would be completely healthy. If we take a look at other charts like NVIDIA, obviously this thing has been one direction with a negative divergence there on the RSI. As you can see, it's also very extended from that 200 SMA and is getting pretty frothy from the 50 there too as well. And even the 20-day moving average, you can see it held, but then we're getting pretty frothy from that as well. Meta also negative divergence, and this thing looks like just an algo is just constantly buying little tiny dips and pushing this thing up further. So I'd say just be cautious. Let me see if I can draw the straight line. Be cautious if this trend line were to break, because that could potentially mean that we might have more period of consolidation or potentially a stronger pullback. And same thing goes with Apple. Apple price action was getting coiled up here tightly. Nice day, up 1.73%, closing at, I believe, another high or just about another high. And this thing also looks very like algorithmic, right? It's just a very, very strong trend line, very shallow pullbacks. So I would say, hey, if you can play bullish momentum to the upside, but just be aware that if one of these trend breaks, it could potentially lead into more of a consolidation or of a pullback. And we've seen these algo rallies take place before, like right there, like right here. When these trends break, we saw more volatility pick up. If we take a look at the Qs on the monthly chart, we are reaching up into the upper monthly expected move, but we still have some space for that upper quarterly, which would bring us up to around the all-time high. Another rare thing that I wanted to call out was what happened to Verizon Communications today, and rather that many telecom stocks. But this thing was wild. This is a huge drop for this typically lower beta name, down 7.5% on the day. That's coming off of the lows very slightly. It has an 8.3% yield, and you can just see here that the rate of change, the one-day rate of change being, minus 7.5, you have to go back to the great financial crisis to see the last time that we actually had a down day in Verizon that big. So, and what you'll notice is it typically actually is followed by bigger up days and big down days. That's when the volatility kind of takes hand. Like you see this all over the place where you have a big down day, not too far after you have big up days, okay? Most of the time in any market, when you have increased volatility and you look at a one-day rate of change, you see them clustered together. Bigger down days are clustered by bigger up days. And it has actually marked bottoms when we've seen this. So the prior time before that was in 2002, and then prior to that was 2000. So during the .com, bubble bursting up throughout in this range. So the market is quick to price in apparently some news that took place, and that news that's coming out was from a Wall Street Journal article. It was dropped not too long ago, and it was a pretty darn good article, well investigated. So if you want to check that out, make sure to look at it as to why. But it does seem like they could be very well in for a long litigation process. But it's not just for Verizon. This goes back to like AT&T, back to like Ma Bell days. Like it goes way back. Even AT&T today was down 6.69%. So a pretty large rate of change. But we've seen some volatility in this name. So I wanted to bring up, okay, well, what does it look like as far as how far is extended from the 200-day moving average? And you can see it is actually fairly rare. The last time we saw that was when we had the COVID crash there in 2020, where you had the extension from the 200-day moving average being over 20% to the downside. The time before that was in 2008, the Great Financial Crisis, and then the times before that was pretty similar to Verizon. So, I mean, are these going to be potential? Is the market pricing in this news very quickly? And, it really depends on what comes out of this. Who knows what comes out of it? Like, for all we know, I'm not going to get into what exactly is going on, but there's health hazards, there's employee issues, there's all kinds of stuff that was taking place, but the market is very quick to price in that news. So during that potential litigation process, or how long ever it lasts, maybe the market's very quick to discount it, and then to see what potentially can come after that. Could be some opportunities, potentially intraday scalps, potentially swing trades. But other than that, they got hammered, obviously, and it's very rare to see these type of moves. If we take a look at the dollar has been getting crushed too. I would be watching this trend line. So multiple days, right when Yellen went to China, basically it was right around here. The dollar got completely crushed, slightly down on the day, but this helps various assets. We've been seeing a couple 2-day consolidation over here. As it broke down, gold was breaking out. Tomorrow, I'm going to be posting a video with Alistair Still, the CEO of Gold Mining Inc. I had him, I wanted him to come on because of the recent breakouts, just to get more of a macro look at things. If we take a look at oil, also backing off from that 200-day moving average. There we saw that very strong run up, and now we're kind of pulling back. I'd be looking at that 50-day for a potential reconnect at some point. But as we noticed, the last time we got that 200-day moving average, it kind of cracked down there too as well. So overall, just very, very choppy environment there. Copper got completely crushed today too. That was down 2.26%. As you can see, we have that divergence. So we have a higher high in the S&P 500, lower high in copper, and we've marked that out many times in the red lines right here, as you can see. It's led to market sell-offs and consolidations. But then also on the flip side, we have bullish divergences that led to market rallies multiple times, including the last one right over here was rather nice. So the last chart I want to go over is the Nasdaq Summation Index. We had the potential change in trend take over, and we did get above that zero line. So we had a potential change here. Then we had it flip over here. So we went through that consolidation, and then we flipped over for the last 4 trading days or so, and we started moving up. So this thing is still working out rather well. I'd just be more cautious, obviously, if it starts turning back around with parabolic SAR comes in upticks. It is obviously a lagging indicator, but it gives us more conviction on a potential change in trend, as it had here, as it has here, and here, as it has here, and so forth many times. That's all I got for you on today's episode, everybody. Hope it helps out, and I'll see you back here on the next.